This is a super easy strategy that you can follow to know exactly when to enter and exit your positions to get filthy rich in this upcoming crypto bull market cycle. My name is Mitchell and I've been a full-time investor since 2020 and I've grown my own crypto portfolio in the millions. I also own a Bitcoin mining farm with more than 80,000 machines which we're managing for our investors and clients worldwide. And I often get the question, hey Mitchell, when should I enter and exit the crypto market for maximum profits? Most people never really take profits during a bull market because they believe that the market will only go up, but it doesn't. And if you did not take any profits, then one day you'll wake up and your portfolio will be completely decimated. Minus 70, 80 or 90%. That's the harsh reality that most crypto investors face. By the end of this video, you'll be able to confidently cash out your crypto close to the top of the crypto market with a proven system in place. No more blind guessing, struggling with FOMO or losing all of your money due to greed. So here's a quick breakdown of what we're going to be covering in this video. Part one of this video will be about understanding the crypto market cycles and why this is so important. Number two is making use of proven market indicators to assist your investing decisions, so your buying and selling decisions. And the final part of this video is all about documenting your investing game plan and why this is a crucial part that should not be forgotten. So before we continue, I need to make one big disclaimer over here. I'm not a financial advisor. Nothing in this video is financial advice or should be considered financial advice. This video has been made purely for educational purposes, and before making any investment or changing anything about your investment portfolio, always do your own research and or consult with a professional financial advisor. If you want to see more videos like this, make sure to hit the like button because that triggers the algorithm to show you a few more of my videos. And if you want to stay up to date if I post videos like this, because I'm planning to post weekly tutorials and breakdowns in which I will help you to maximize your profits as a crypto investor, then make sure to subscribe to my channel as well. With that out of the way, let's dive into the nitty-gritty of this video. Part one of this video, understanding the market cycles. All assets move in cycles. Stocks, bonds, crypto, real estate. I'm not sure if you've noticed, but they do. And there's something very special about the crypto market cycle. That is that the crypto market moves in 4-year cycles. And within those 4 years, we see a bull market and a bear market. In case you don't know what that means, let me explain. A bear market is a period during which the price of something tends to decrease. Why is it called a bear market? Because when a bear attacks, it normally attacks with its claws down. During a bear market, you'll see headlines in the news stating that Bitcoin is dead and that it will never recover again. On the other hand, a bull market is a period during which the price of something tends to go up. Why is it called a bull market? Because when a bull attacks with its horns, it tends to attack upwards. During a bull market, if you know anything about crypto, you probably have seen that if crypto goes up, it can shoot up very quickly. We've seen a few bull markets by now, 2013, 2017, and 2020. And during bull markets, people only talk about how their crypto is gonna go to the moon. And the market is completely dominated by FOMO, fear of missing out, and greed. But why does the crypto market move in 4-year cycles? Well, that has to do with the Bitcoin halving. Let me quickly explain what that is. There will always ever be a maximum supply of 21 million Bitcoin, and this new supply is created by the Bitcoin miners. Now, how does this process work? Well, whenever you do a transaction on the Bitcoin network, that transaction is bundled together into a block of transactions, hence the name the blockchain. And miners process these transactions on the network. They do this with specialized pieces of hardware called ASIC miners, application-specific integrated circuits. That's a fancy name for just a specialized computer that processes transactions on the network. And for processing these transactions, the miners get rewarded and they earn block rewards every time that one block of transactions is processed. So in 2009, when Bitcoin was just launched, the block reward was set at 50 Bitcoins for every block of transactions that was mined by the miners. Every 4 years, this new supply, these block rewards, gets halved. So in 2013, the block reward was 25 Bitcoin per block of transactions. Now we've seen a Bitcoin halving event a few times. Currently, the Bitcoin block reward is somewhere around 3.125 Bitcoin per block of transactions that is processed by the miners. And every time time we see the new supply of Bitcoin getting halved, the price of Bitcoin tends to shoot up because people realize that there's not enough supply for everyone to go around. And this presents an amazing opportunity for crypto investors to cash out their crypto positions and to make life-changing money along the way. But how do you know if you're close to the top of the crypto market? Well, honestly, by just looking at the price, you just don't know. I compare this to sailing on the open ocean without a compass. You don't know whether you're sailing north, west, south, or east. You need some kind of tool to navigate, a compass, or you need to be able to navigate using the stars. But without that tool, you're basically blind and don't know in what direction you're going. The same holds true for investing in the crypto market. If you want to take the guesswork and your emotions out of your investing decisions, you need to make use of a set of proven market indicators. So in this part 2 of the video, I'm actually going to show you some of the proven market indicators that I'm using to determine whether it's a good time to potentially cash out parts of my crypto portfolio for maximum profits. Look, are you going to exactly time the top of the market? No, that's almost impossible. But even if you're close to the top of the market, like 20-30% away from the top, then that probably still means that you can make life-changing money. So let's dive into these indicators. I'm going to share my screen. All of these indicators that I'm going to share in this video today are completely free for you to check out. You don't need to pay anything. This is just public information, public tools that anyone can use. So the first tool that I want to share is the MVRV Z-score. You can find it on lookintobitcoin.com. Below this chart, there's always an explanation of what the MVRV Z-score does. So if you don't understand any of these indicators, you can always read the description yourself. But let me explain. Basically what the MVRV Z-score does, it's a mathematical computation which can be used to determine whether Bitcoin is overvalued or undervalued right now. Basically how you interpret this chart is you look at the orange line, that is the MVRV Z-score. Whenever the orange line hits the green box, it means that Bitcoin is very undervalued, and normally that's a really good time to accumulate more Bitcoin because you're probably near to the bottom of the market cycle. Then when the orange line hits the red box, it means that the market or that Bitcoin is overvalued, and usually that's a good time to start taking profits. This is the first indicator. Let's move on to the next one. So the next indicator that I want to share with you in this video is the 200-week moving average heat map. So what does this indicator do? Well, let us read below. This indicator uses a color heat map based on the percentage increase of the 200-week moving average. Depending on the month-by-month percentage increase of the 200-week moving average, a color is assigned to the price chart. Now, let's go back up to the price chart. Over here, you see that chart. So on the right side, you have a color coding scheme. And if you look at this chart, you see that whenever the line is blue, it usually means that you are in accumulation phase. But when the line tends to turn yellow or even red, it usually means that you are close to the top of the crypto bull market and that it might be a good time for you to take some profits off the table. Another easy chart for you to use. Next, let's have a look at the hash ribbons indicator. This indicator is more of a local bottom indicator, so it tells you when it's a good time to buy crypto because it's selling at a discount. So what does the hash ribbons indicator do? Basically, the red zones that you're seeing here on this chart are periods where miners actually need to sell their Bitcoin in order to fund their operation. So miners are forced to offload their Bitcoin holdings to basically continue mining. And that usually means that Bitcoin is very cheap, that you can buy it on the open market below the production cost of miners. If you double check this, here the red zone, yes, that's a local bottom. Here the red zone, yes, that's a local bottom. Here the red zone, local bottom. Here the red zone, it's a local bottom. So this indicator is great at telling you when Bitcoin is basically cheap and when miners are selling their Bitcoin. Let's have a look at the Puell Multiple. Again, here below all of the indicators, there's a simple explanation which explains what the indicator does. So what does the Puell Multiple do? It explores the market cycle from a mining revenue perspective. Bitcoin miners are sometimes referred to as compulsory sellers due to their need to cover fixed costs of mining hardware. Again, this is an indicator that looks at what miners are doing in the market. So how do you interpret this chart? You basically look at the orange line. That is the Puell Multiple. Whenever the orange line hits the red zone, it means that it's a good time to take profits. Whenever the orange line hits the green zone, it means that you are near a local bottom in the market. Let's move on to the next indicator, which is the Pi cycle top indicator. So the Pi cycle top indicator looks at two moving averages, the 111-day moving average and the 350-day moving average multiplied times 2. What you should understand from this chart is very simple. Whenever the orange line crosses over the green line, it usually indicates that the top of the market is in. And actually the Pi cycle top indicator has been 100% accurate in predicting the tops of the crypto market cycle in the previous 3 market cycles. So you already see that over here in the description as well. This indicator has historically been effective in picking out the timing of the market cycle highs within 3 days time. So either you're 3 days before, 3 days after, but very close to the top of the crypto market cycle. So that's the Pi cycle top indicator. Let's look at the NUPL indicator. Basically, the NUPL indicator shows the percentage of people in the Bitcoin market that are in profit. So whenever you're in the green zone, it means that the majority of the people are in a loss. Their crypto portfolio is down. Whenever you are in the orange zone, it means that around 50% of the people are in profit. And the more people are in profit, the closer you are to the top of the market cycle. So what we should be looking at here in this chart is the blue line. Whenever the blue line approaches the red territory, it means that it's time to probably cash out some crypto because everyone in the crypto market is in profit. That means you're close to the top. Whenever the blue line is in the green zone or close to the green zone, it means that a lot of people are in the negative, meaning that you're probably close to the bottom of the crypto market cycle. Let's look at one more indicator, which is the RHODL ratio. What is the RHODL ratio? So sometimes I also don't know the definitions of the indicators by heart, but you can very easily read it below. The RHODL ratio looks at the realized value of different waves of investors in the market. This chart, again, is very easy to interpret. We look at the orange line, which is the RHODL ratio. And whenever that orange line approaches the red box or touches the red box, it probably means that you're very close to the top of a crypto bull market. Whenever the orange line is very close to the green zone, it means that you're close to the bottom of the crypto bull market. And if you want to dive a little bit deeper in how this all is calculated, again, you can look at the description below each of the indicators to further your understanding of what they do. And the final indicator that I want to share with you is the Bitcoin rainbow price chart. So this is an indicator that looks at the sentiment in the crypto market. Warren Buffett has this very famous saying, which is be fearful when others are greedy and be greedy when others are fearful. So you should be selling when everyone is buying and is greedy, and you should be buying when the market is an entire bloodbath and nobody wants to touch Bitcoin. And here this chart gives a very nice color coding of the overall sentiment of the market, where purple indicates that Bitcoin is dead, so nobody wants to touch Bitcoin. Everyone just lost a bunch of money. Nobody wants to put their money into it again because they only think it's going to go lower and lower. That's usually the best time to buy Bitcoin. And on the other hand of the spectrum, we have the red zone, which is basically bubble territory, where people are only talking about how their investment portfolio is going to go to the moon and the market is completely dominated by greed. That's probably a really great time to take some of your profits off the table. So those were the 8 indicators that I wanted to show with you in this video today. And yes, of course, you need to take your emotions out of the game completely. It's going to be very hard and challenging if you see that crypto is only going up and up in value every single day. But you need to stick to your game plan and you need to be disciplined. And it's better whenever you start to execute your game plan and whenever you've taken your profits to just go on a holiday or something and just don't look at the prices of Bitcoin anymore. Don't look at any newspaper articles or headlines anymore, because those will tempt you, or those will convince you to go back into the crypto market again and buy in at a much higher price. So whenever you take action, stick to that action, stick with your game plan, and stick to the rules that you have agreed with yourself up front before the exponential phase of the bull market starts. I've shared my game plan with you to take profits, However, my game plan doesn't need to be your game plan, but it at least gives you an idea of how I use these proven market indicators to make my investing decisions and to completely remove emotions and greed out of my investing strategy and actions. If you've gotten good value out of this video, make sure to hit the like button, and if you want to see more valuable videos like this, make sure to subscribe to my channel. I've also made sure to link 2 more videos up in here, which I highly recommend you to check out if you're interested in the topic of making money as a crypto investor. That being said, peace out. I'll see you in the next video.